Good afternoon, everyone. Welcome to our presentation on Commodities 101. So today, we're glad to have everyone here joining us, and we hope that this will be an insightful presentation to all. So basically, some of the topics that we will look to cover in this presentation is give a basic overview of the commodities market, why they actually matter, and for instance, what in our second part we will look into, does it actually have a signaling function, and how that actually relates to us in a Sri Lankan context, but also in a global context. So before anything, let me just give a brief background into the commodities market. So as an investor, the commodities market offers you a different path or another way of diversifying one's portfolio, along with having vested interest in the stock market and the forex market. The commodities market actually accounts for a per annum of close to 20 trillion US dollars, of which the oil market alone accounts on per annum average of close to 2 trillion US dollars. The commodity market is usually split into two sectors. So you have your hard commodities and your soft commodities. Now, your hard commodities are resources that are mined or extracted, such as oil, copper, aluminium, and gold. Your soft commodities are your agricultural products or livestock. So in terms of the commodities market, much like many industries over the last year, it was hit by COVID. And it was somewhat of a double-edged impact for the commodities market, as COVID actually struck both on the demand side and the supply side. And if we look at most of the counters, we can see that there was a significant depreciation along these counters. None more so than oil, which actually saw a 66% decline in the first quarter of 2020 alone. Now, if you look at some of your base metals, that's really where your copper and aluminium reside in, you saw close to 16.5% decline. Now, across these counters, there was one counter that actually did appreciate during this period, which is gold. I will actually cover the reasons for this a bit further down the line. In terms of our outlook, along with some of the industry experts, we can say that the recovery is set to continue now on the back of continuous fiscal and monetary stimulus packages offered by the governments. However, we do stress that with COVID, caution must remain. So now, if you look at some of the main commodity price indexes, the energy price index, we see that there was a huge fall off. So this is mainly your oil and coal. This was mainly on the back of factors such as the aviation industry coming to a complete halt, coupled with the fact that transportation also went down as a work from home policy was adopted globally. In terms of your base metals, again, we saw a slight dip in April 2020, and that was also due to the lockdowns being enforced. However, we can see that the agricultural price index was somewhat stable, and this is mainly due to the fact that most of the agricultural commodities are deemed as necessities. So they are demand and price inelastic. In terms of the oil price, if we just gauge that on its own, we see that the oil prices actually collapsed to levels of the 2007 recession. So now what this graph does show is the collapses and recoveries of oil pre and post major recessions that occurred in 85, 97, 2007, 2015, and 2020. So like we stated here earlier, we are now starting to see oil reach pre-pandemic levels. Now, even in the news, just as of yesterday, Bloomberg experts predict that this summer we will see oil barrels rise to $80 per barrel. They're seeing a huge appreciation in oil. However, we also expect this to be partially offset because the US will be, or are looking to, release some of the sanctions they've imposed on Iran, which will actually cause a huge excess supply, which will actually bring down the prices of oil. So they might actually stabilize a bit more in the third or fourth quarter of this year. In terms of the global demand for your base metals, now again, as we see March, April 2020, we saw a lot of negative demand. Now, the base metals here, we mainly look at the counters of copper and aluminium, and they're mainly driven by demand in China, as they're one of the major manufacturers of the world. Now, most of y'all would know that copper prices actually reached an all-time high a couple of weeks ago, but we have seen several shocks in the copper pricing, especially this week. And that is mainly due to the fact that there is demand waning in China. In fact, one of the major import premiums, the Yangshan copper import premium fell to $28 per ton, which was its lowest level since 2012. So you're actually seeing some demand wane. So you might see copper prices actually go down. Now, how does this actually affect? Now, if we look at the first quarter alone, in some of the key counters that we look in terms of Sri Lanka, we see that these are somewhat stabilizing. But why do these really matter? Because in Sri Lanka, we really don't invest in commodity markets. But the main reason being is that certain counters or certain companies heavily rely on the actual price fluctuation on certain counters. So for instance, your copper prices are very like for counters such as Kalni cables or ACL cables, they really look at these kind of counters. And for Alumex and Swiss Tech Aluminium, these price fluctuations do really matter. So that is one reason why we look at aluminium and copper, whereas we look at the oil prices with keen interest is because usually a hike in the oil price is preceded by a hike in goods and services or the cost of goods in the country. In terms of our second part, we now look at how certain commodity trends might actually provide us with the insight into the economic cycle, not just in Sri Lanka, but globally. And because of this, we might actually be able to use these past historic trends along with our technical analysis to actually hedge our bets moving forward. And this is really why we say that keeping a keen eye on commodities might be of real value, especially in the Sri Lankan context. Now, what I mean here is, for instance, now earlier on, we did highlight that gold was one of the only counters to actually appreciate during COVID. And why is that? Now, what this graph really shows is the price of gold from 1978 onwards up till 2020 last year. And what we have done here is these red columns actually highlight periods of economic downturn, i.e. recessions. Now, why has gold appreciated during the whole COVID pandemic? It is because historically, gold has been a great storage of wealth during economic turbulence. And what we also have analyzed from our past trends is that whenever there has been a great appreciation of gold prices, once there has been a sustained, and I do emphasize sustained period of depression in the gold prices, it usually acts as a signaling function. And what I mean by that is when I say sustained period, it's not just something that has depreciated maybe over 2 weeks. This is something that has depreciated over a couple of months or 3 months even. And that is mainly due to the fact that the decline in oil prices might actually signal to us that the economies are actually now on the recovery stage, as it were. So if we use these historical analysis, we might be actually able to hedge on when exactly if gold prices are depreciating at a sustained level over a sustained period of time. And we might be actually able to ascertain that this might be a good time to actually re-enter into the market as the market is on the recovery. In terms of copper, we see that there's actually a direct relationship between its pricing and downturn. And what I mean by that is, historically, if we look at it, a sustained period of decline in the copper prices usually means that the global economy has gone through a bit of a downturn. So these, again, like I said, even in the previous slide, these are all these global recessions that have occurred in this given time period. And what we can see is that whenever the copper price has sharply declined over a sustained period of time, it usually means that the global economy is heading towards a recession or is in a recession. But again, like gold, what we can see is that if copper prices start to appreciate, then we can expect that the global economy is coming back into a recovery, and we can start hedging our bets or deciding whether or not to re-enter the market. Now, for instance, like we've mentioned before, there are certain times where shocks do happen, and that is completely normal. But like I said, a shock that lasts over a couple of weeks may not predetermine that the economic cycle is about to change all of a sudden. And what Brent oil spot prices actually indicate to us is that over a historic period, if we're looking to keep a keen eye on the US economy, we have seen that oil price surges or Brent spot price surges usually precede a recession in the US. So we see this especially in 2008 and 2015. Now, we see that the oil prices actually surged by a huge, like a significant amount as the recessionary period was about to kick in. So again, this is a very good signaling factor. If we're keeping a keen eye on the US economy, is that as the US economy's ramifications in terms of economic recession or boom has a global impact on all of us. So this is one of the main reasons why we believe that commodity markets, even though they're not play such a huge role in the Sri Lankan context, it's still very good as an investor to keep a tab or keep a pulse on these counters, because we can use these to actually hedge our bets going forward. Now I will actually hand it over to our technical analyst, Harin, who will give you an outlook on certain counters such as copper, aluminium, and gold. Over to you, Harin.
Thank you, Nuwan. So first of all, I'll be starting with gold, and moving ahead, I'll be going ahead with copper and US oil. So basically, looking at the gold for the past few days and few weeks. So this is actually the daily chart, and also the RSI is somewhat around in 55 range, in the mid range, which is 55. And we were able to see how gold was actually trading somewhat below this key level 1740, 1760. So, and also it actually went below 1700 in the month of March. So also from that area, we were able to see that the price actually broke the key level 1740, 1760, and the price went up to around 1800. From that 1800 key area, we were able to see how the price actually touched the key level 1840, 1860, and went up to the level of 1900. So there is actually there was a daily resistance at 1940, 1960 in between as well, but the price actually failed to touch that key level of resistance. And due to strong US NFP, non-farm payroll data, that's coming releasing soon, the price of gold actually declined a bit and failed to sustain at 1900 key level, and it came to the support of 1840, 1860 key level. So we can see that there is certain structure highs, structure lows, structure highs going, and there is bullish momentum in the gold pair. And also looking at it, we can see that how the price has actually inclined over the like starting from March. The price has inclined and reached the 1900 key area. So if the price actually breaks this support area 1840, 1860, we will be able to expect the price of gold declining to 1800. And if it manages to sustain about 1840, 1860, once again there could be a retest to 1900, and further breaking that area will be able to expect 1940, 1960 key area. So moving ahead with copper. So looking at copper, from the daily chart, the RSI is 45.33, and we are somewhat in a strong support level considered as 4.4 and 4.45 key area. And also, if we take a look at from the period March to April, we can see how copper has been actually consolidating in between a range of 4 to 4.15. So in this area, we were able to see a bit of consolidation, and there were some breakout from that key area. and a minor retest, and the price actually went to a key level of 4.8, 4.85. So this key area, which was 4.4 and 4.45, we were able to see how the price actually broke that key area, and there was a retest, and initially it made a new high level 4.8, 4.85 in the daily chart. So, and now that is in a key strong support level and an ascending channel. As we can see, there is an ascending channel and small declining momentum, since there should be since overall there should be certain structure high structure lows. So from this daily support, if the price manages to break, we can expect the price to reach the daily resistance again, 4.8, 4.85, and breaking that key level where it will reach, there's a possibility that it will reach the 4.2, 4.25 key level. If the price actually fails to sustain about this in between this 4.4, 4.45 key level, there could be a potential downside momentum to 4.05 key level. So overall, it's in ascending channel. So there's still potential that the price could actually incline from this support area if it actually sustains above 4.4, 4.45. So moving ahead to US oil. So looking at US oil, we are somewhat in a strong key level of resistance. Previously, it was actually a resistance, which is considered 6.6, 66.5 and 68 key level. So I would like to show the weekly chart that in 2020 we were able to see that there was a decline from that area, which was the previous resistance level 66.5, 68, and in 2019, actually this is 2019 and 2020, we were able to see somewhat the price getting rejected from that area as well. And in 2021, actually that key area got broken. So basically this previous resistance zone, which is considered as 66.5, 68 key area, got broken, and now the price is actually trading above this key level 66.5, 68. So also the daily RSI is considered to be 66, and I believe that if the price actually sustains above the 66.5, 68, we'll be able to expect the daily resistance 74.5, 76. So overall, this structure, we have an inclining trend line, and here basically we had a ascending triangle, I would say, because we have the trend line going here, and the top flat line, we had the top flat line, and a breakout of this flat line. The price actually is now inclining, and small retest from here, we'll be able to see the oil price getting to the resistance of 74.5, 76. So thank you. Over to you, Nuwan.
Yes, thank you, Harin. Thanks again, Harin. Very insightful as always. And we thank you all for joining us today. And we hope that this presentation was able to give you some clear insight into a very interesting topic. Thank you very much, everyone. Have a lovely day and a lovely weekend.